Diagnostic companies reported revenue which was in line with street estimates this quarter. While the reported numbers saw an operational improvement on a sequential basis, the revenues were largely in line with estimates on a seasonally strong quarter. However, there are fears of lower growth in coming quarters with regards to competition as well as core markets getting more saturated. A little more first on the Q2 numbers. Both Dr. Lal's and Metropolis reported what was a sequential improvement in margins this quarter. Dr. Lal's reported margins of 27% versus 23.5% last quarter, and Metropolis saw an improvement to 26% versus 24.5% last quarter as well. The COVID-19 revenue contribution has reduced close to the lowest levels for both companies. The street is now squarely focused on the base business, the non-COVID-19 revenue. Both Dr. Lal's and Metropolis reported a growth of around 15% and 16% respectively in the non-COVID-19 revenue. It was also aided by recent acquisitions such as Suburban Diagnostics for Dr. Lal's and High Tech for Metropolis. Now, the street, however, seems to be fearing competitive intensity and pricing pressure, which will pressure growth metrics going forward. The industry, in fact, has faced price pressure, especially since COVID-19, from the likes of online aggregators, hospital chains, and pharma companies entering the industry, which has largely lower barriers to entry. Examples include the likes of Max and Apollo from the hospital space expanding diagnostic operations, Lupin and Torrent entering the space, and, for example, online aggregator Tata 1mg starting a pilot project in Bangalore offering routine tests for as low as 100 rupees. Incumbents such as Dr. Lal's and Metropolis have as a result seen price erosion in key routine tests, wellness packages, resulting in higher marketing costs due to competition. Both the companies are focused on growing the wellness segment and see this as a potential growth driver by retaining customers. Additionally, the companies have alluded to some moderation of growth in metro markets after pent-up demand easing post-COVID-19. Analysts are now becoming more cautious. Estimates are patient volumes, which grew at around 12 to 14% in the past 5 years, will now slow to around 6 to 8% in the next 5 years, as core metro markets are likely to grow in single digits. Margins have probably seen their best levels and won't return to peaks of around 28 to 30% due to higher promotion spends and lower ticket sizes, leading to negative operating leverages. All this will result in EPS estimates possibly being shaved off. Some estimates are EPS will slow to just about a 2 to 3% growth over the next 3 years versus a growth of over 10% they recorded in the past 5 years. And as growth estimates shave off, the hefty valuations are expected to correct. Dr. Lal's is currently trading at around 55-60 times on a one-year forward basis. Metropolis also expensive at over 40-odd times on a one-year forward basis. Lastly, what could be a silver lining? Organized competition has helped push quality and service. Also, most importantly, there have been some reduction in the heightened pricing intensity and online discounts, which was mainly seen as an entry strategy by a couple of online aggregators and new entrants. Hence, as operations normalize for the new entrants, the ultra-low prices, which are unsustainable in the long run due to the nature of fixed costs, are expected to normalize. Also, companies are banking on newer segments. For example, preventive testing, Swasthfit for Dr. Lal's generated the highest ever revenue for the company this quarter, and wellness is now 12% of sales for Metropolis versus 8% earlier. Specialized testing could also be another avenue of growth. For example, Dr. Lal's has launched a segment for reproductive diagnostic testing. Companies are also toying with the entry into new geographic segments such as Tier 2 cities, expanding test menus to fuel growth. And lastly, merger and acquisitions, according to analysts, cannot be ruled out as the industry might see further consolidation.